Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And holy crap, for us Alibaba bag holders, this was a major week. We got Alibaba earnings and we got the Michael Burry 13F. We already did a video on the Michael Burry's 13F. We're going to talk about the Alibaba earnings report line by line in terms of what my interpretation is as an Alibaba shareholder. We'll get to it.
Two Super Guys Trade Stocks.
All right. So people complaining about the commercial. Dylan shortened it and decreased the volume a little bit. So hopefully it's a little bit more tolerable now.
No, I haven't shortened it. I'm going to shorten it. My bad.
Okay. Well, either way. So it was a pretty wild week where we saw like this big pop in Alibaba stock and a lot of Chinese equities. And then we saw this dramatic sell-off after earnings and slowly recovered throughout the week, right? Continuing all the way through like, Friday, basically. So this snippet is even up to date as far as that goes. We still are down massively compared to where we were pre-pandemic or this whole anti-Chinese e-commerce sentiment evolving. So we've got a lot of room to grow from that perspective. And these companies have gotten a lot more healthy by utilizing their cash flow in the interim. We'll talk a little bit more about that as we get into the actual nitty-gritties here. Ooh. So these are the headlines you saw as Alibaba shares dropped, right? It's like, oh, shares fall 6% after 86% drop in profit. Like, holy crap, man. The whole place is on fire. I don't even know why people own this dog crap anymore. It's just ridiculous. Like the news media loves these like overly negative headlines where so you and I have talked about this a little bit before, but when you look at Alibaba, they own a lot of investments, right? Someone even actually recently, that I was going to use this angle in this video, but talked about Alibaba as basically a China AI ETF. Have you heard this?
I have not, but it kind of makes sense.
Apparently, they've been investing in so many like Chinese-based AI startups that they're like, this person was claiming that they're almost like an AI ETF. Just to give you an idea of how many early stage investments Alibaba likes to make. So you get a lot more volatile, GAAP earnings numbers when that happens. That's why Buffett has talked about how it shouldn't really be included in GAAP earnings. He understands why it is, but it's a bad proxy. You really want to look at operating earnings as a much better proxy for the business and how it's developing over time. So we're going to kind of look at that a little bit.
And obviously, this is 3 days old, so the price is...
Yeah. Exactly. As far as like the actual revenue numbers, it came in a little bit above expectations. But you saw this reporting of this 86% drop in GAAP earnings, reported everywhere. Now, this is their press release. All right. So these are the highlights that management's putting out. Now, don't forget, management, every time they put something out, it's almost a sales document. They're trying to justify why you should buy their company. But these are some nice highlights when you're talking about that they had double-digit growth in GMV year over year. All right, so that's actually the gross merchandise volume. That's how much people are buying through Alibaba's entities, and double-digit growth is a pretty sexy number. When we look at the revenue growth, it's 7% year over year. That's something for a company that is a dead dinosaur in a dying economy. They were still able to grow 7%. All right.
Where does this 86% drop come from?
Yeah, we'll look at that here in a second. Yeah, so you're actually going to see it right here, 96%. But revenue is 7% year over year. Income from operations, all right? This is the number that Buffett would say is a much better proxy for how a business is doing that includes a lot of investments, right? It was negative. It was 3% year over year. And when it was adjusted EBITDA basis, negative 5% year over year. So seeing those as negative is not a great thing, all right? So that's why I gave it the old gray flag designation here, all right? But nowhere near as startling as this, this GAAP net income decrease of 96% year over year.
Okay. Yeah, no, I don't like that at all.
Yeah,
I completely rely on you now. I don't even read Baba headlines. I just wait for this video. So
I love it. So they give you why right here. Primarily attributable to a net loss on our investments in publicly traded companies during the quarter. Right? That is what they're saying is they had a mark to market the valuation of any publicly traded investments that they had, and it's significantly down, right? They own Chinese equities, and Chinese equities have been beaten up. Therefore, they're having to mark these things down to their current price, which is a significant decrease, and it shows as a net loss in the quarter.
Okay.
That's why.
All right.
Yeah.
That's not what the headline would make you think. All right.
Yeah. Yeah. I mean, that's a good question. So some of the other metrics that I care more about also didn't have a fantastic quarter. All right. So net cash provided by operating activities. Right? This is cash flow that's coming from operating their core business. Right? So you're actually looking at free cash flow, a non-GAAP measure of liquidity, $2.1 billion for the quarter, a decrease of 52% compared to last year. So that's a pretty big net negative.
Not
right?
good.
Yeah, this year-over-year decrease in free cash flow is mainly reflected an increase in capex. All right, so capex increase could be positive, could be negative. It's hard to say on that one. We'll talk a little bit more about it when we get to individual segments. The majority of which of our investments in Alibaba cloud infrastructure, as well as a special dividend from Ant Group. So that's why they didn't get the free cash flow to be such a significant number this quarter, is because they didn't get this large special dividend from Ant Group.
Okay. Why?
So they did pay one, but it wasn't as large as it was last year. I forget the exact number. It might be in here somewhere. It wasn't like a main point of mine, but I want to say it was like $1.6 billion dividend last year, as opposed to like $400 million or something like that this year. It was a significant decrease in the dividend, but that's up to Ant Group to decide the size of that.
Right.
All right. So we're looking at the actual revenue growth here. 9% is for all the individual segments, and then 8% is the consolidated, because they had a little bit of this inter-segment elimination. Right? That's because it's a big conglomerate of multiple different businesses.
Yes.
So they can't recognize the revenue and K now that comes from Tmall. That's why you see that.
I would say 9% is pretty solid.
Yeah, high single digits. This is more growth than you're getting out of Apple at this point.
Yeah, that's pretty good.
Yeah. All right, so let's move on here. So once again, this is a 12-month look back on the revenue growth. Looking at individual segments here, they have a couple of segments that are growing massively, right? This international and their K-Now Smart Logistics are both having pretty significant growth. The worrying thing with them, though, is that look at this EBITDA number year over year. You're talking about one that got significantly larger in a negative direction. So they're losing more and more money on growing this Alibaba International Digital Commerce arm. That's not surprising, though, right? But they are talking about having significant, I want to say they said 20% order volume growth. So it's going to take a while, but as they grow volume, eventually they'll be able to hopefully have economies of scale and turn them into a net positive from an EBITDA perspective.
I will say this is very odd because obviously we have hindsight, so we can see what happened with the stock after this dropped. There has been quarters where they had, like the last couple, where they did really, really well, and it just went down and stayed down. It just continued down. This one, if I didn't know what had just happened the last 3 days, I'm still kind of surprised it has broke out as high as it has. It doesn't quite make sense. So there's a sentiment change too.
Yeah. I think that's largely being driven by a sentiment change more than it is anything else. And, one of the nice things as an Alibaba shareholder is that they've been ahead of the curve. So this is actually a new slide that they added to their earnings presentation. They got a nice little heart from me here. Looking at how they've been returning money to shareholders. All right. So they actually spent a total of $12.5 billion returning money to shareholders over the last 12 months. It's a pretty big number.
Yeah, that's solid.
All right. And, another $4 billion are going to be paid out in dividends, $1 per share, plus they declared a special cash dividend of 66 cents per share that'll be paid out this June, I think it is. Yeah, June 13th. So they've been very consistent upon using their cash hoard and the continual cash flow in rewarding shareholders. And I think as we kind of emerge from this post-anti-China commerce or technology period, we're going to see a significant appreciation in a very short period of time because it's been held under value for so long. And you saw them just chew up shares during that time period. Look at this 5.1% reduction in shares outstanding over the last 12 months. And that's after stock-based comp.
Yeah, that's fantastic. I've been waiting for them to do more of this. So they're going to pull a NVIDIA. That's good news. All right.
Quite possibly. Yeah. And actually, if Alibaba has a PE of like 70, we'll know what's up. And they've been able to keep their costs under control. Meta got a lot of credit for this year of efficiency, but it was pretty common amongst a lot of large tech companies, and they were no different in that they got their costs under control and have kept them under control. That's what this chart right here basically shows, that all these different segments are nothing got really overly disproportionate in terms of the share of revenue which it's consuming.
Perfecto.
All right. So this is reiterating that whole kind of, EBITDA performance of the various segments here. This is actually is on a 3-month. So this is just a quarter. The previous slide I showed you was actually for the entire year. But you're still looking at the revenue growth here. Their main line is only about 4% revenue growth. That's the classic China e-commerce. Not exactly right home to mama about that level of growth, but it's still persistent. Like I said, it's still more than you're seeing out of large companies like Apple. China Cloud, 3%. It started to tick up a little bit, 1%, 2%, now 3%. They did actually give a prediction that this number will be double digits by the second half of this year. I was
okay.
We'll see. We'll be cautiously optimistic on that one.
That has been claimed so many times.
Yeah. Well, the nice thing you have seen though is look at the EBITDA change. It's a very small number still overall, right? But the EBITDA itself has been growing rather sizably. So that cloud segment has been growing more and more profitable, despite the kind of muted revenue growth. And they talk a little bit about that in the conference call. We'll get to it a little bit later on too. And as I've already kind of reiterated, they do have some issues with significantly widening EBITDA losses in these kind of fast-growing segments here. But at those sort of growth rates, I'm kind of not surprised. It'll be just something to keep an eye on over time and see where it goes. I mean, mind you, you're now looking at the Alibaba International Digital Commerce being larger on a revenue basis than the cloud.
Yeah, that's so disappointing. The cloud, I was okay.
Yeah. So, these are the sort of things I like to look at when I'm valuing the business. This is cash flow. All right. Particularly if we look right here, this is a 12-month free cash flow. This is in US dollars. So they had $21.6 billion in free cash flow over the last 12 months. Yeah.
And then that's I think it's more than NVIDIA, right?
Yeah, probably. And then this is when you're looking at their balance sheet. This is their net cash position: $61.8 billion positive net cash. So they're using that now as part of the special dividend, continuing dividend, and continual stock buybacks, trying to reduce their cash balance, as well as investing internally in the cloud segment in particular, trying to increase the revenue growth there and to optimize for positive EBITDA by having a better product mix. It's going to be here on a slide in a second. So they give individual kind of business segment updates here. This is Taobao, Tmall, China e-commerce, right? They did have so our strategy of price competitiveness and focus on user experience is yielding results. So they're investing internally within Taobao and Tmall. Achieved double-digit online GMV and order growth year over year. All right, so double-digit GMV. So that's 10% or more in terms of the actual gross merchandise volume that's being transacted on Taobao and Tmall. They also grew their VIP services. This is their Amazon Prime equivalent to over 35 million active members, which is huge because now you're getting the really fat profit margin money from the subscription service, and you have people that are coming back and using your product more and more. And these tend to be more affluent households. Really, something that's super important for their future. This is nice to see finally grow back a little bit. You remember talking about this a while back, the customer management revenue (CMR). Where this isn't Alibaba themselves acting as the retailer. This is, retailers that are on their Taobao, Tmall platforms paying money to Alibaba for advertising their products. This is a higher profit margin service.
This is what also Amazon does it.
Yeah. But when Alibaba was first kind of selling off, this was a large talking point about why was that they were becoming more and more the retailer themselves rather than actually generating this customer management CMR revenue. But CMR revenue increased 5% year over year, so we're back into a growth phase of that. Nice. Additionally, in the conference call, they talked about having new AI-based products that they're being launching for their merchants in order to help grow the CMR revenue going forward. So I think that's a tremendous potential for them. So I'm excited to see how that turns out.
That and cloud. If cloud can do what they're saying, that'd be here you go. Cloud intelligence.
Yeah. So this is the cloud segment here in particular. So I wanted to highlight this increasing EBITDA, 45% growth year over year. It's still small numbers, all right? But they have been focusing on, quote unquote, according to them, better product mix, trying to have a higher profit margin products. So although they've been growing very slowly, the products that they're pushing people towards are better products for them to be in long term. So hopefully you get to a point where you've kind of cannibalized yourself enough where you now have lost a little bit of that lower profit margin business and gained enough for the higher profit margin business that it starts to become self-sustaining, where you're seeing this larger and larger growth kind of going forward. And they're predicting that the second half of this year we may be transitioning to that phase where we're going to start seeing double-digit growth again.
If that happens, I would assume they hit over 100, because this is, I know it's such a small segment, but it's a thing that should have been so high by now. I think the projections like in 2021 for this year were insane. But
Yeah. It's obvious that was way off. I think I still have that chart somewhere where they showed like just parabolic rise in the cloud market segment for China and how far off that was from reality.
So it's about as accurate as the Fed's pivots in 2020 where the rates would be. It's pretty good.
Sounds about right. And then we're back to this Alibaba international digital commerce. Now, I am very excited to see how fast this is growing. I am certainly cautious about the fact that it is, a large money loser, and it continues to be operating at a wider and wider loss. However, I am optimistic that at some point this will become a EBITDA positive business for them. And like I said, now you're looking at it being their number 2 largest segment in terms of revenue. So their number 2 largest segment growing at 45% year over year. That's big, even if it is
Sexy.
operating in net loss.
Yeah, it's sexy. You got to spend money to make money. And they spend enough.
Yeah. The other kind of interesting thing about the way they've chosen to go about this is, you've seen a lot of talk about PDD and Temu in the U.S. Alibaba seems to be skirting the U.S. market for the most part. They're fighting in smaller markets like Turkey. They talked about how I forget the name. Is it Trendyol? Is like the number 1 e-commerce app downloaded in like the Gulf region now. In terms of exactly. They're fighting in battles where they have a higher likelihood of success, and once they become entrenched there, it's going to be hard for a competitor to come in. Even if it's someone else that's got a lot of experience in e-commerce other parts of the world. I think it's a cool strategy.
It is an interesting strategy. I would think that you'd want to have America because we buy so many things, but okay, all right.
Yeah, well, unless it's not going to be worth it long term for you to compete in that area. And K now had their logistics arm. This was the one that had the canceled IPO. So part of their kind of negative EBITDA was so significantly large because they had to basically have how they term it here, primarily due to retention incentives granted to Now employees in connection with withdrawal of IPO. Right, because all these employees that had stock that were looking forward to the IPO and be able to become a millionaire, say overnight, and be able to sell their stock in the open market, hopefully. Unfortunately, we're not able to do that once the IPO got canceled. So they had to kind of open their purse up a little bit in order to retain these employees. I'm not surprised that happened and that there was a cost to them canceling the IPO, and we're seeing that on this quarter.
All right, that makes sense. Can't be mad at that.
All right. Conference call notes. There were a couple interesting ones. So this is where we talked about that CMR revenue growth second half of the year due to monetized AI product launches. So the second half of 2024 is looking very interesting for Alibaba. All right, we have both prediction for cloud to go to a 10% growth year over year, and we have these AI products getting launched for the CMR revenue growth, hopefully. Another kind of interesting point, this is the first time I remember them having the Alibaba International CEO on the call. I forget his name, but they actually gave him a segment to speak where he talked about 20% order volume growth. So there seems to be moving that business segment a little bit more centrally focused, if you will, which is, I think, an interesting evolution of Alibaba now that we're seeing this era where they're really focused on delivering results for shareholders and returning cash to shareholders, and now reigniting growth, particularly, or really focusing on growth within the business segments they have, and kind of getting rid of non-core assets like SunArt and those sort of physical retailers.
I will say, I think so. If this is accurate and this goes as planned, they're going to regret not spending more in buybacks at $68 or whatever, because if this happens, I'm jinxing it right now. But I don't think we'll see that price again.
Yeah, yeah. I mean, it looks like we got a double dip when we're done. So I did a little free cash flow yield number after this earnings report. This is what I kind of calculated here. This is as of like 2 days ago. So 197 billion dollars in market cap, 61.8 billion negative cash, enterprise value of 135 billion, and then that trailing 12-month free cash flow from their own kind of report here, 21.6. Gives like a 15.9% yield, like a cool 15.9. I mean, that's easily still triple the value of most of the large mega cap like tech companies in the United States, as far as like, being a better valuation.
But you know what's more important than numbers, Vinny? Burry bought it.
Yep. Yep. Very still a holder as of the most recent 13F closing date, March 31st.
Here's a chart. Obviously, this is orgasmic. That's what we wanted. If people added around 70, I've had this line drawn. I added a little bit, not a lot, because I already have too much. So I did not add a ton. But obviously, we broke the 200. That's fantastic news. I will say chart reading on Baba is semi-pointless because it's traded 18 hours a day and it's kind of ridiculous. But, we passed this $87 level. I hope no one sold calls.
I did, but then I bought it back.
Oh, you did? You bought it back?
Yeah. I bought it back. I don't own any calls, and I think we talked about this briefly a while ago, but I bought some JD as well, so I own some Baba and some JD now.
Yeah, I bought some at 25 and 30.
Nice.
All right, guys. Let us know what you think.
Catch you next one.